Aligning risk, temperament, and time horizon. One of the biggest mistakes people make in investing is copying someone else's strategy. They hear what worked for a friend. They follow what an influencer is doing. They chase whatever is performing well right now. And then they're surprised when it doesn't work for them. This lesson is about stopping that pattern, because successful investing is not about finding the best strategy. It's about finding the right strategy for you. Your investor profile is the alignment of three things: your risk tolerance, your temperament, and your time horizon. If even one of these is misaligned, the system breaks, usually at the worst possible moment. Let's start with risk. Most people misunderstand what risk actually means. Risk is not volatility. Risk is not seeing your portfolio go up and down. Risk is not temporary losses. The real risk is abandoning the plan when things get uncomfortable. And that has very little to do with intelligence, and everything to do with psychology. Some people can tolerate seeing large swings in value without reacting. Others feel stressed the moment numbers move against them. Neither is right or wrong. But building an aggressive strategy for someone with a low tolerance for uncertainty is a guaranteed failure, because eventually, emotion will override logic. The second piece is temperament. Temperament is how you behave under pressure. Do you feel compelled to act? Do you want to fix things immediately? Do you struggle with inaction? Or are you comfortable waiting, even when nothing seems to be happening? Markets reward patience, but only if your personality allows you to remain patient. If you are naturally reactive, you need more structure, not more freedom. If you are naturally calm, you can tolerate simpler systems. This is why good investing is not about being brave. It's about being honest with yourself. The third piece is time horizon. Time horizon is not what you hope will happen. It's how long your money can realistically stay invested without needing to be touched. Short-term money should not be exposed to long-term risk. Long-term money should not be managed as if it's needed tomorrow. When people panic during market downturns, it's often because they unknowingly invested short-term money into long-term assets. That's not a strategy problem. That's a time horizon mismatch. When these three elements, risk tolerance, temperament, and time horizon, are aligned, something important happens. You stop fighting your own system. You stop second-guessing every decision. You stop feeling the urge to intervene. Your system starts to feel boring, predictable, and manageable. And that's exactly what we want. Remember, the goal is not maximum returns. The goal is maximum adherence. A slightly lower return strategy that you can stick with for 20 years will outperform a brilliant strategy you abandon after 2. In Tier 2, we design portfolios and systems that you can live with, through boredom, fear, noise, and distraction. If your strategy feels stressful, it's too aggressive. If it feels exciting, it's probably misaligned. If it feels calm and almost dull, you're getting close. In the next lessons, we'll use your investor profile to shape how your money is structured, automated, and protected from emotional decisions. You're not trying to beat the market. You're building a system that works with your psychology, not against it. That's how real wealth is built.